Hi, this is a quick video of Monday the 3rd of August Open, and it's interesting because it's got a little bit of everything. This is the play of the Open. We started between 88 and 600. And if you look at my short, you're definitely thinking, well, that's a counter trend trade. Yes, well, it is, but look at what happened at 600. So when we opened for the day, over 600 we had very, very little participation. In fact, we traded less than 2,000 contracts at 01 and 02, none at 03. So my going short at 01 was counting on the fact that I could risk just a couple of ticks to go all the way down. Now, I placed my stop, my target at 94, and that was a mistake. I should have placed it at 95 because that's a high volume node. That's actually point of control of the day, and that's where the move stopped. So I didn't get filled at 94, although the price was touched. 600, however, wasn't just a random number. Not only it is psychologically important, but it was the level at which we started last week and which we ended last week. And on Friday, towards the close, we had a massive amount of contracts traded at that level. And that's because the big boys were trying to pull all stops in order to make it close either above or below that 600 so that they could get their bonuses. And just out of curiosity, the shorts won. So when I see price rejected at 600, it makes me feel very comfortable to take a counter trend position because I know that chances are pretty low. Plus, I have a couple of confirmations here. I look at my cumulative delta and I see the fact that it's making lower highs. And then I look at the move up and I see that although the book is stacked at the bid, there's very little contracts comparatively that are traded at these prices. So when I notice that buyers are nowhere to be seen here at 01, I feel warm and fuzzy inside about a short, and that's why I place it. Now it goes up, it trades one tick higher just to take all the shorts out, all the ones that were thinking, oh, we're going to make it with a tight stop, 04 is never going to trade. Zero contracts at 04, but if your stop was there, it would have been triggered. And then I just wait for this thing to come down. I place my target again at 95. This was a very conservative target. I could have potentially waited because this thing broke lower. And it doesn't really matter. I mean, as far as scalps go, this was still a good target. If you look at the size of the average swing, what do you have? You have 14 up, 8 down, 9 up. So considering that we didn't have a clear picture on what type of day this was gonna turn out to be, and considering the fact that we've been making higher lows and we haven't broken that 95 level yet, then taking profits at 95, it's still a good idea. It's still the most likely scenario for price to revisit. It could have been a fake out of the break at 95, and then it could have taken us higher. At any rate, I am pretty happy with the results. It's a new week, I'm up another 10 points. I am gonna fund the account this week and possibly go live just after that. So here, looking back at the action, you've seen me take out my target because I've noticed how this thing was breaking down. Buyers are pulling out of the way, they're pulling their limit orders, and the sellers were stepping in quite heavily. This somewhat stopped at 95, and a bounce was to be expected. So when price breaks lower from this area of the hesitation, and I see that sellers lose steam, you'll see me getting out of the position quite prematurely. Although all in all, I'm still quite happy because this all played out just like the volume profile suggested that it would. So I'll just let this roll. I'll see you tomorrow.